I was the second youngest woman to take a company public. I was like the 21st founder CEO woman to take a company public.
What was that transition like, stepping into the role as CEO?
The first word that just came to mind, I'll just be honest and say it, is terrifying. I don't think anyone ever feels ready for it. Always, 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 always stop and talk to your customers. Just stop what you're doing. Stop the strategy, stop the execution, stop the metrics, and just have human conversations with your customers. What would you do if you could do it all over again?
That was Julia Hartz, co-founder and former CEO of Eventbrite. Over nearly 2 decades, Julia learned that building a company isn't just about becoming a household name, but it's navigating the tough moments that will ensure its longevity. In this conversation, Julia walks us through the eventful financial journey of Eventbrite, from bootstrapping to raising venture capital during the 2008 financial crisis, to taking the company public and eventually leading it back to private ownership. We talk about managing a crisis, balancing customer needs with shareholder expectations, making hard decisions as a CEO, and why the best founders aren't the ones who avoid mistakes, but they're the ones who learn from them fast enough to bounce back. I'm Isabel Johannesson, and you're listening to Build Mode. This season, we're taking a look inside the fundraise. Hi, Julia. Welcome to Build Mode.
Hey, thanks for having me.
We're so excited to have you on and to chat with you today. You have had a roller coaster of a career and are in a really exciting kind of reset phase right now, huh?
I am. And as you said that, I hated roller coasters growing up, but now I love them.
I love roller coasters.
Yeah.
I want to start off with talking about something else that I love selfishly. You started your career working for MTV on the set of Jackass.
I sure did.
Please tell me about this.
Well, I generally, when I tell people that, I wait to see their response, and then I either say, I'm sorry, or you're welcome.
You're welcome would be the correct response in this case, yeah.
All right. Thank you. That gives me direction. I was an intern. I think being there during that time was so incredible because I was an intern when the Jackass guys sent in their demo. I feel so lucky to have been there during that time because it was so unique. And the vision they had was so specific. So I graduated college that year and I started working in that department. And so I got to see the first season and movie of Jackass developed and produced and executed. And, I have to say, like, their vision throughout and their persistence for what they wanted to do and show on television was unparalleled, right? So it was an honor and a privilege.
Very cool. I don't know what this says about me, but I grew up watching Jackass.
You're awesome.
Maybe, or, there's probably some other more child-appropriate TV shows to be watching, but alas, I just had to ask. Now we can get into some of the more, relevant things for this podcast. But so you co-founded Eventbrite with your then fiance, Kevin, and were the CEO for a while. So take us back to the very beginning. 2006, was it, when you founded Eventbrite? What was sort of the insight at that time that you decided this is what we need to start building?
Yeah, well, it was a confluence of our stories being woven together. So it was Kevin Hartz, my fiance at the time, co-founder, husband, co-parent, life partner today. We're about to celebrate our 20th wedding anniversary, which is incredible.
Oh, congrats.
And he came from, a background of having been one of the first investors in what became PayPal. And I think was really motivated by the idea of democratization. I think that team, lots been said about the PayPal mafia, but that team really brought something to consumers that we didn't have before, which was the ability to pay each other using, online means. And what started as beaming money from Palm Pilot to Palm Pilot was then, morphed into this merchant processing platform that turned anyone into a merchant. And that was such a, groundbreaking idea that allowed anyone to start businesses online. So with that, Kevin and his business partner, Alan Braverman, at the time had developed a bunch of what I would call sort of apps driven by the PayPal API to bring that democratization into other verticals. So not unlike, apps and sort of that wrap layer being built on top of foundational models today. One of them was event ticketing. Another one was subscription payments for Yahoo groups, which Yahoo turned off right away. And then another one was international money transfer for immigrants to send money home to their families better, faster, cheaper than Western Union. That third one actually got traction and was funded by Sequoia Capital. So they had to turn their attention fully to that, and they let everything else just be in maintenance mode. When I came along, I'd come from a background, I was at FX Networks at the time, so I'd moved from MTV to FX Networks, and I was working on a bunch of original content, including Nip Tuck, Rescue Me, The Shield. I mean, I was in the right place at the right time. I was so fortunate. But I also had been working on a show that was about fandoms that we were piloting with the documentarian Morgan Spurlock. And I'll never forget going to this really niche fandom meetup and being totally and completely overwhelmed and confused about the subject matter. But in the back of my head, I realized that there was this palpable energy and connection in the room of people getting together in real life. And it always stuck with me how incredible that was and how we were sort of trying to replicate that, on screen. It was really hard to do. And then our third co-founder, Renaud Visage, he, in addition to being an amazing engineer, is also a prolific photographer. And I really think that his why was a curiosity around helping people turn passion into profit. So we all get together. That was not a short story, but long story short is about we all get together. And the meaningful moment is that one of our earliest scaled customers was Michael Arrington and TechCrunch.
Full circle.
And it was Michael understanding that he had created content that people wanted to interact with, and they also wanted to interact with each other. And truly, this was our first inspiration, and we built the product to meet the needs of people like Michael. Now, I don't need to tell you that that's a really hard first customer to have.
Yeah.
I mean, we had lots of other tech bloggers, but I would say that Michael stuck out as very unique in that, he was willing to call us up and give us the feedback. And Kevin and I were the check-in desk for the first ever TechCrunch Disrupt. We had a guest list, and we were checking people in and taking their feedback. And I've got the receipts and the pictures to prove it. But that was really what inspired us, was this idea of democratizing an industry, making it possible for anyone to sell tickets to any kind of event, bringing people together through live experiences, and creating a new form of almost scaled content online that was bringing people offline and really into that space where they could create indelible memories and exchange that energy.
I mean, what an amazing story. I think there's even a lot of, Silicon Valley history in your story and in Eventbrite that's been along for that journey.
Are you calling me old?
No, I'm calling you insightful. You've got a really
I'm a historian now.
interesting perspective that I want to dig a little bit deeper into. But let's talk about the event industry specifically. So,
Sure.
We talk a lot today about bringing people back together, getting off of our phones and getting IRL and, meeting people face to face. But that has taken some twists and turns, thanks in part to COVID. I'm curious sort of your 90,000 feet view on the industry. So at that time, of course, it was a lot of excitement about bringing people together. How long did that hype kind of rise? And then how did COVID affect it? And where do you think we are today?
It's been 20 years since we started Eventbrite. And so that does make me old, by the way. That wasn't, it's just facts.
No.
But I think that what has been most shocking to me has been the prevalence of, or the premium to, in real life events and experiences and connection. And, in 20 years, we've seen the rise of social media. We've seen the adoption of mobile. We've seen the advent of big data. We've pondered a world where we might be gathering virtually. We have endured a global pandemic. We are now on the precipice of, this, I don't even know what words we're using to call it, but this really amazing, disruptive, and creative time. Every time, live experiences continue to be at the nucleus of what people want. And, during COVID, there was a point about 14 days in, when our company that was 14 years was essentially no longer in existence. We were processing more refunds than revenue. We had negative revenue such that all of our Tableau dashboards had broken because we hadn't contemplated going, below the zero axis. And I thought, wow, I thought a lot of things, but one thing I thought was, what an interesting time to be living through a moment where it's such a black swan event that the entire basis of our business has disappeared seemingly overnight. And yet, even in that darkest moment, there was this light on in the back of my head, like, don't forget that connectedness is in Maslow's hierarchy of needs. It's right there above physiological needs, and security is the need to connect. And I think that is something that has really driven me. And but again, I say it's the most shocking thing because, wow, there have been so many times when people have told me that live events are dying.
I mean, wow. And you were at the helm of the company through that, major scary moment of COVID. So you became CEO in 2016 when Kevin stepped down and you stepped up.
Yeah.
So what was that transition like, stepping into the role as CEO?
The first word that just came to mind, I'll just be honest and say it, is terrifying. It was not something that I don't think anyone ever feels ready for. And I'm going to go out on a limb and say that most first-time CEOs and even second or third or fourth-time CEOs are learning as they're building and sometimes just making it up as you go along. And I'll never forget one of our earliest investors, Roelof Botha, who's served on our board for 14 years, said something to the effect of, be careful what you wish for. And I mean, there is quite literally, besides my husband, no other person on this planet, or my mom too, who is more supportive of me than Roelof. But I'll never forget those words because I'm like, oh my gosh, did I even wish for this? I'm not sure, But going through the period of time from like 2016 to 2019 was definitely for me a kind of a mental game of like, what would Kevin do? And am I doing it right? And am I good enough? And am I ready? I don't think anyone's ready, but I was asking myself, am I ready? Am I prepared? And then COVID hit. And I had to leave all of that behind in order to, A, I was the best person to run the company through a crisis like that. And B, there was no time for me to be asking those questions anymore. So it was a gift in a way, to go through such a massive, unprecedented crisis. I got so tired of saying that word. I probably didn't say unprecedented for about 2 years after 2020. But, I took over in 2016. We acquired our largest competitor in music, which is our largest category, in 2017. We went public in 2018. And 2019 was just about like growing pains and after all of that change, figuring out how to move forward and scale and become lean and focused. And so we came into 2020 unwittingly prepared for a massive disruption.
Well, I mean, yeah, it's better to be prepared in that situation, but I can imagine you learned some lessons in crisis management through all of those twists and turns. Yeah. What are some of your key takeaways as your time as CEO of Eventbrite?
One moment that comes back to me is I think it was around March 13th or 14th. Of 2020, and we had all vacated the office. We had this beautiful 50,000 square foot office that was busting at the seams at that point. I remember there were like lines for the bathroom, and that was like my biggest issue coming into 2020. It was how we were going to build more potties. And I remember the day that we decided we should all go work from home. And I remember being the last person in the office, and that's something I think I learned from my father, who was a prolific manager, just to, really, and he was in Vietnam. And so, he's like embedded in me like servant leadership. And so I was literally the last person. I was going around turning the lights off, and I never saw that office again. And I remember having this this really heavy moment, feeling like, wow, this is big. We met up on Zoom the next day, and I remember seeing, a lot of uncertain faces in my team, and people's kids were like bouncing off the wall because they weren't in school, and, dogs were coming in and out of the frame. And I was like, the first thing I said was, let's make a pact and a new cultural norm that we don't apologize for our kids or our dogs, because I'm pretty sure that's going to like make it into their, into their psyche. And we don't want them to be going to therapy about that. There's going to be a lot more to deal with. So let's just like stop apologizing and just, play through. The second thing is, and it just kind of came out, I hadn't really planned to say it, but I said, given what you know about this business, what would you do if you could do it all over again? And I got people starting to talk and like loosen up and get creative. And by the end of that meeting, we had a 1-pager of what we would do differently if we could do it all over again. Because I think as like companies scale and grow and teams grow, you inevitably acquire barnacles, and you don't always like slough those off on a regular basis. And you're not thinking about, and that's I'm not even talking about team size. I'm talking about strategy. Egos get involved. You get kind of precious. There's sacred cows, all the things. And so we really got focused, and I was not surprised, but really pleased at how quickly we could identify the critical few things that we should really focus on. And then at the end of the meeting, I was like, well, let's go do that, because we're going to do it all over again. And I think that gave us direction and a North Star to be brave enough to go move forward and move forward quickly. We were completely restructured and reset in our strategy by April of 2020, and ready to endure a very long hardship. We knew it was going to be long. I can get into that later, but I think the things that I learned in that moment was, have the bravery to rethink the core concept. Be okay with taking a really bold leap, even in times of uncertainty. Don't delude the idea of something being very, very bad, just because it's scary, and plan for the worst.
Oof. I'm not sure if I'm inspired by that or horrified, because
I need a drink.
Oh, yeah, great. Me too. It's like 11 a.m. on a Friday.
Yeah. I mean, really, taking myself back to that.
5 o'clock somewhere. Let's talk a little bit about some of the other chefs in the kitchen, because even though, of course, you and Kevin were at the helm of this, you had a lot of investors and board members and eventually public shareholders. Let's talk specifically about the fundraising journey along the way. So, I mean, you have raised a lot of money for Eventbrite over the years. How was the fundraising journey? Was there ever a point where, in the beginning, sure, there's a lot of excitement around bringing people together. Was there ever a point where investors were hesitant to invest? How did you convince them in your pitch?
I'm going to need to take you in the Wayback Machine, and you're going to have to trust me that I'm telling the truth.
I'm buckling up.
it's hard to believe. But when we started Eventbrite, we made the almost academic decision to bootstrap the company. So we used our own money to build the company. And we were fortunate to have money to put into the company. It was all of our money. So there was a big personal risk that we were taking in starting this company. And because it was our own money and we didn't have an infinite amount of it, we spent less than $250,000 in the first 2.5 years. And it was just the 3 co-founders. We didn't have money really to hire a team. We had a few maybe contractors. We also then raised an angel round from friends and family and early angel investors that bridged us to our first institutional fundraise. But when we decided that we were ready to go out and take money from venture firm, it was really when we had traction. We had product market fit. We had traction in our earliest categories. We had line of sight to scaling, and we were profitable. And we were so excited to go out and pitch Eventbrite to the world. And it was fall of 2008. And that couldn't have been a more terrible time to go out and pitch Eventbrite to the world. We met with 27 venture firms, and we got 27 no's. Now, something that I think is brilliant about Kevin, who is, as prolific of an angel investor as he is a startup founder, is that he's just I mean, maybe the most transparent person I've ever met in my life, and has changed me as a person through that, because we're sort of obscenely transparent in our lives with with our family. And I think that like that is such a different mentality for people sometimes. So what I mean by this is he left our 2009 operating plan with every partner that we met with. And as we were getting these notes, we're like, okay, we'll come back and check in, next year. 2009 ended up being an incredible year for us because we were set up well and we were so lean and efficient in operating out of necessity, but also because what ended up happening is that, that kind of why for Renault ended up coming true. People started, as they were losing their jobs through the financial crisis. I mean, talk about a time when the bottom fell out. Like it really fell out. People started to teach classes to make money. They started to go to more networking events to find jobs. They started going out to be with one another because during hard financial times, people actually want to be out with each other. It was a time when people were drinking. So, there was that.
Good for business.
And good for business. And we soared through 2009. So in Q4 of 09, we went back out to not all 27, but a select few, and showed them our results. And it was like this, really surprising reaction to that, which was this novel idea that we'd actually beat and exceed our plans that we had left them with, because so many businesses had to reset, and rebase during that time. So we had more than a few offers, and we knew that we would want to work with Sequoia again. They had funded Kevin's prior company, Zoom, XOOM. And, so we were thrilled to partner with them. And that's when Roelof joined the board. But I do think that there is a lot of meaning in the hardship. And, the reason why I started this story with "you're going to have to believe me" is it's just not the same anymore. And it hasn't been for a while. And I sound maybe curmudgeon-y, but I think that's a shame.
Yeah, I agree.
And then, once we had Sequoia on board, I have to say it was a lot easier to get Lee Fixel, Henry Ellenbogen. I mean, some of the most, again, important investors of our time to really back us and push us forward and help us scale to, IPO.
Yeah, and I love one of the nuggets in there of, founders being able to go back and re-pitch an investor that has previously rejected them. Especially, I think a founder's worst nightmare might be being rejected by Sequoia, right? But how did it work when you came back to them? Of course, showing new results, but do you think that investors are generally, wanting to kind of keep in touch after they reject a startup? Or I've even heard that investors don't often give a hard reject and they'll just say like, not right now.
Yeah, I mean, I can view the world through the lens of venture now. Kevin has his fund A-Star, and they're doing quite well and very busy. And so I, kind of keep one ear open. I think that, I would say that Kevin is again, being a very transparent person, is very sure to let people know if it's not going to be an investment they're going to make, which I think is a great benefit and a great virtue. But yeah, I mean, I think our story, I would say, says that, even if you do get a flat out no, to not treat that as a never. And certainly if you are able to retrench and work hard and prove out your thesis, you deserve to update everyone. We were just super humble about it. And remember, at the time, starting a company together as a couple was not in vogue. At all. And so, on top of proving out business and I think really customer acquisition, because we were doing it in such a different way than other competitors, we were building a self sign-on machine that was growing more from a viral coefficient than, inside sales. I think that was second to the business question and customer acquisition was, how's this going to work? And so again, the transparency thing, we would go into meetings and that would be the first thing we'd tell them. Like, here's our operating plan and here's what happens if something goes wrong, and we divide and conquer, and here's what we'll do if, what hits the fan. And that seemed to kind of like help get that question off the table. And so I also think like maybe the lesson there is hit the most obvious questions first, even if they're the most uncomfortable.
Yeah. Know your weaknesses and don't be afraid to just spray paint it on your forehead.
Yeah,
Here's our plan.
At the time it was a perceived weakness because of all the horror stories that had gone before, all the like bad examples that had gone before us. I don't typically rest on any laurels. I will say I think Kevin and I proved that you can successfully scale a business, a culture, a company, and a relationship. And then we have this hat trick where he was CEO for the first 10 years and I was CEO for the second 10 years. And I actually don't know how we made it through that. Like that was not something I would maybe recommend for other people, but it was incredibly fulfilling and exciting.
Why wouldn't you recommend it? I'm curious.
It's a tough thing to have one person be the CEO and then switch and have the other person be the CEO. I just think that's like diabolical sometimes, because it's really hard to not. First of all, it's really hard for the person who's not the CEO to not be like, what are you doing? And then it's super hard for the person stepping into CEO to be like, am I doing it right? It took a lot of communication, a lot of trust. But I'll never forget, after the first week of being CEO, I came home and I was pretty frustrated with Kevin and he kind of didn't understand why. And I finally found my words and I said, when you were CEO, it looked like Candyland and it's actually Tron. And I'm like, I was like such classic 80s references. I'm like, I just don't understand. Like, how did you make it look so easy? And I was like kind of mad at him about that, which obviously he didn't deserve, but I found my way.
Yeah.
And I was so lucky to have him by my side as a mentor, to have Rule Off. Again, I mentioned them before, but Lee and Henry, they were incredible starting team voices to have as these coaches that if you really open yourself up and listen to them, you had these incredible nuggets of wisdom and cheat codes, to figure out how to make the right decisions going forward, which really mattered in the early days, but it was critical to our survival during COVID.
Well, I have to say, Julia, you've made it look easy in your own way, too. I mean, you're one of the very few women to lead a successful tech IPO. Let's talk about that for a minute. So what
Thank you.
led up to the decision to take the company public?
We always knew that going public was a goal for us, that once we hit a certain revenue threshold, once we felt that we had predictability, once we knew that we could scale Eventbrite in a really responsible but also aggressive way, we knew we wanted to be a public company. And why? Well, because we felt that public companies are the shining example of transparency, of validity. And we wanted to access the public markets, that capital, which really came in handy when we needed it during COVID. So I'll never forget, I went to a public company CEO's wedding, a tech company CEO's wedding, right before we decided to launch our IPO. And at the bar, there were other public tech company CEOs. And they all, I've known them for years, but they all were like, why are you going public? Like, it's terrible. And I remember, nodding and being like, okay, I don't think they're changing my mind, but I made a pact to myself that if we chose to go public versus any other route, I would never complain about it. And I would just, I would embrace it. I would tell the truth, but I would never really bitch about it. And I don't blame them. I just thought I want to try to do something different. When we did go public, the day we rang the bell on the New York Stock Exchange floor, I was struck by kind of three bittersweet moments amongst this just really joyous day. We brought together our families, our earliest employees, we call them Brightlings, our earliest customers. We had kids there. I mean, it was phenomenal. There was a donut wall. Enough said. Yeah. But there were three things that kind of struck me as these pangs. One was, and these were all little facts that were dropped to me during the day by the New York Stock Exchange. One was that I was the second youngest woman to take a company public. Two was I was the 21st founder CEO woman to take a company public. And the third thing was just an observation, which that after we rang the bell, in the reception afterwards, they said, we looked across all of our archives of Bell openings, and we've never had as many women on the podium as you had today. And it was just our executive team, it was 50-50 as it had been for years and years and years. And so it was like, struck me like, this is 2018. This is crazy that, I feel like I'm breaking these glass ceilings that just shouldn't even be there. It didn't feel good to me, but the moment and the celebration did. It really was such an epic day. I would say like day 2, reality sets in. You've got this quarterly cadence. You've got a lot more investors than you had before. Being what somebody called it to me, somebody I really greatly admire. But they said a microcap company. It's hard to be a microcap company in the public market, and it really does start to feel at some point like, is it worth the overhead of the cost and the time and the effort if you don't, you really earn the investors that you get. Another wise person said that. And at some point you have to like decide whether or not it's, it makes sense for the company.
Yeah. But I mean, on that note, like, what else do you wish someone would have told you before going public? What are some of the sort of shock factors that founders might not realize if that's their end goal today?
I think that I thought that based on what I'd heard, that going public was going to take all of my time. And I'm not like, I'm really aware and humble of the fact that like we had our fair share of challenges as a public company, right? And I do think that I imagined that the majority of my time would be spent in IR and sort of public company stuff. And, really, if you know your numbers and you know your business, which any good CEO does, you don't really need to over prepare. You need to be understanding your investors and what they're looking for so that you can speak the same language. But that doesn't have to be something that you're brilliant at. The business results speak for themselves to a certain degree. And, it's performative to some extent, earnings calls and that sort of ceremony. But I turned it into a fun thing. I mean, most things that I do, I try to find a really like fun way to do it. So we would have, post-COVID when we were working mostly remotely, we'd have camp earnings. And so camp earnings started on the Monday of the investor week. It ended on the Friday, and we'd all get together and work in the same room. And, there were tequila shots involved. Oh. And it was just a really great way to sit and talk about the business all week. And that was like, to me, that was just so fun. And so many great ideas came out of that week where it would otherwise be a dreaded week.
I mean, hey, tequila shots, donut walls, sign me up.
Why
this
not?
Sounds like a great time.
I know. We should be doing that right now.
We should be. But it's not always all fun and games. So, I mean, when you went public, you listed at a 1.67 billion valuation, but then Eventbrite recently sold for about 500 million. Is that right?
Yeah.
So talk me through what happened with this recent sale.
Now you have to get me the tequila shot.
Now I need a tequila shot.
Yeah. That's like an
anyone?
obvious pivot. So that's what I just mentioned. Like I'm alluding to the fact that like I don't think that I have all the answers of how to drive value as a public company because I didn't. In that time span, we also went down below zero and came back. So I'll give us that, right? We rebuilt the company over time, and in that time, the market shifted too. So I don't sit. That's painful to hear those numbers, but I don't sit around every day and think about, oh my God, like if only. I think that would be a torturous place to be, and I don't think it's productive. I am really proud of what we built in terms of what Eventbrite means for culture, what it means for humans, what it means for business owners, and I'm really proud of the decisions we've made. And my hope is, while transitioning the company out of the public markets at that price would never feel good to a founder CEO. My decision process was about what will actually allow Eventbrite to be a value-based company of great value on the top line, great value on the bottom line, and most importantly, value to our customers for hopefully longer than we're alive. And so I think sometimes you have to sort order your priorities, in a way that make sense for your customer, and it's painful. And so, I don't think there's any sort of, like, I would never try to spin it in a way that, makes it feel good, but that's not the point. And so while, yes, I wish that I'm sitting here saying we went public at 1.67 billion and we went private at 10 billion, that would have been incredible. I know that we made the right choices along the way in spite of some quite literally unprecedented black swan, insane events. And I learned a lot, and I made a ton of mistakes, and I always learned from those mistakes. So, I'm excited about the future. Like, when I think about Eventbrite as part of Bending Spoons, knowing that team and knowing how they think about great product and customer and, the future, I know that Eventbrite's going to be able to withstand whatever is changing, however fast it's changing, and continue being there for our customers. And that definitely helps me sleep at night.
Good. I'm glad you can sleep. No, but really, I love your outlook on everything that has happened and how you've persevered through all of these ups and downs in the markets and really pulled Eventbrite through. Yeah. I'm curious what were you struggling to do when it was public that you think making it private was going to fix?
Well, I start by saying the landscape has completely changed, right? So we're not alone in a consumer-driven business that needs to think entirely different about how you deliver product, the speed to market, the innovation opportunities. Eventbrite is a well-known brand for a reason. And that's not because we spent a lot of money in marketing. It's because we built the product to meet our customers' needs, and we rarely deviated from that in 20 years. So in order to do that in this landscape and in this market, you have to be able to dismantle a lot of things and rebuild them quickly. So I always knew that whichever route we took, it would need to go through a massive disruptive moment. And while we had disrupted ourselves during COVID and rebuilt, there's nothing like the time that we're in right now. That is, we've never seen this before. The second thing is that, as stewards of our capital, we needed to make sure that there is longevity in that and return capital to our investors. And again, I wish it could have been a lot more. We never sold a meaningful amount of stock in the company. So Kevin and I are one of the major shareholders of Eventbrite, and we weren't taking money off the table during this entire journey. And that's not to draw, pity. It's to say, I know what it feels like to be a long-term shareholder of Eventbrite. And, I think that the decision of why this, why now really came together through collaboration with our board. Oh my God, I feel so lucky and proud to have assembled some of the best people in business and really to have gone through some really crazy times together in a very collegial manner. I think, I listened to a lot of wise voices that maybe were telling me things that I didn't want to hear. I was probably the last person, who wanted to go this route. But once it became clear that it was the right thing for the business and for our shareholders, I was fully on board and really level-headed and focused about it. So I'm proud of myself for that. But it's not easy. There's a lot of changes that impact a lot of people's lives, and that's really difficult.
Yeah, nothing about this sounds easy. I can only imagine, but I can also only imagine the kind of push and pull between creating this, mission-driven company where you want to create value for your customers while managing shareholder expectations and needing to create value for them. Do those two things ever kind of pull in opposite directions, and how do you navigate that?
All the time. But I can tell you without a doubt, if I had made a list of, all the ideas that investors had for us and what they wanted, and I went out and I did those at the time that they wanted us to do them, we definitely wouldn't be sitting here talking about Eventbrite as a living, breathing company. So and that's not to I think like most of the feedback that I got from investors along the way, and most of it, whether it's solicited or unsolicited, I would call it all solicited, because any feedback is great feedback. And and the reason why I think that, it's important to layer on an editorial lens and a critical lens as CEO is that it's amazing how fast the pendulum swings in the public market. I mean, like it's almost laughable, right? I wish somebody would just like call time out and be like, okay, let's just chart what is the most critical, important thing that investors care about over the last 18 months. And you kind of would look at it and be like, okay, this looks like a toddler trying to choose what they want for dinner. I don't think anybody means to do that. I think that there's a lot of competing priorities that are happening, and there's a lot of noise, and there's just a lot of factors. But if you have to have a backbone as a CEO to say, I hear you, I respect your opinion, I'm taking this feedback, but I'm also going to lead from the front on what I know is right for my customer. And every time I deviated from that North Star, it ended very poorly. And it was painful. So I think that's probably the most critical job of a CEO, is to listen, to be open to the feedback, to take it in, even as painful as it is. There's some really awkward meetings, to realize it's not personal, even when sometimes it feels pretty personal, and to make the right decision for your customer.
And I mean, so now from a consumer perspective, there are, competitors in the space that are becoming more and more popular, the likes of Partyful or Illumar, things that are becoming household names. How was that affecting the stock, and how did that impact your decision to sell?
I'm going to say something I'll probably regret, but do you remember Hopin?
No.
Okay. So Hopin was a virtual events platform that raised billions of dollars during COVID, and you don't know it.
Right. Yeah.
So what that reinforced for me, didn't teach me because I'd already learned it many moons prior to that. But what that taught me was competition's great. Irrational decision-making, especially when it involves capital during such a critical time when other companies could have used that capital, is irresponsible. But yet I was in meetings with investors who were like, maybe you should sell to Hopin. Like, they're doing great, and they're going to, and it was just like, okay, I respect what's happening, but I also know after years of running this company that people are going to come back to live events. And I had, confidence. I think the two words that come to mind is healthily paranoid. I think being healthily paranoid is staying aware of what the competition is doing, understanding why consumers want to use something, and being healthy, which is you stay focused on your mission, how you serve your customers, incorporate great ideas. I think the Luma team is incredible. I think they have an incredible product sense. I think the Partyful team really hit on something that people needed, which was this sense of, who do I go out with? Who should I be going out with? How do I connect with new people? Like it was I think their execution of the, classic viral coefficient is chef's kiss. So I can say those things and be totally enamored by certain parts of how they're approaching things without flipping out and saying, oh my God, the sky's falling. So I would say those companies affected Eventbrite not much at all. It draws more people into this space. But that doesn't mean that they weren't doing things and don't do things remarkably better than Eventbrite. Eventbrite's the second largest trafficked events ticketing site in the world. Our brand awareness and affinity is heads and tails above the competition, including the incumbent on top by a long shot. That just doesn't happen overnight. And so I have to say, I think the proof is in the pudding. And I really think that the lesson for founders is, again, I come back to healthy paranoia. As much as I'm talking right now, listening is way more important, and getting to know those founders and learning from them, which Kevin taught me very early on and really serve me well, we should just call him up.
Call Kevin.
Just call Kevin.
Just call Kevin.
Just call Kevin. That sounds like a good podcast.
It does, actually. No, but I mean, I think Eventbrite paved the way in so many avenues for people to really, come together, but to build platforms to continue to bring people together, whether it's competition or not. I mean, at the end of the day, people coming together is a good thing. And I think one thing I want to touch on here is advice for founders who might be building a marketplace today, a consumer-facing marketplace. That is a challenge. It always has, it always will be, but you navigated it fantastically. And I think there's a lot of people out there who would love to hear your kind of 3 top tips for building a marketplace.
Well, I would say when you said we navigated it remarkably, I'm like in my head, I was like, we had some really big public stumbles that I immediately think of, but that's just the way my brain works. I think the first thing is to know your identity. I think that for Eventbrite, one of our challenges was that we started as a creator-focused company. You know, one company I just admire so much is WAP, which I think is redefining sort of this vertical integration for how creators build businesses. And it feels very familiar to our earliest days in the events category because we were focused on the tools and the enablement for people like Michael Arrington to be able to be successful in selling tickets to events. That is our core DNA and our identity. Throughout the years, as we started to scale and as more and more creators came to us to actually grow their audience and sell more tickets, we kept trying to shift our identity to consumer. And you know, I believe that you can be both a platform and a marketplace, and probably like in minority in that way. I don't think it's about choosing between those two, but I do think you have to choose who your primary customer is. And I think you have to be really careful and thoughtful about the things that you do to shift that identity and losing those customers along the way. And we certainly had a few, dust ups in that regard that were super painful, where we were trying to shift the business model toward consumer and we were losing our creators because we were confusing them.
Can you give a couple other examples of times where you wish you had done something differently so that some of the founders listening can learn from your experience?
Oh my gosh, yeah. So it starts to feel like therapy.
Tell me how you really feel.
Another one that just came to mind is when we acquired our largest competitor in music, it was there was a very strong overlap to the customer that we were serving, but the playing field was entirely different. And I think we had a very bullish perspective that we could bring all the customers along, and we had underappreciated how impactful that would be to their businesses and everyday operations. And these are independent live music venues. These are like some of the most important institutions in America is independent live music venues. And we were in a real big hurry with a deep sense of urgency to bring those customers over to the Eventbrite platform because their current platform was disintegrating. And I don't think we did a very good job of telling them that. And I think they were very confused about why we wanted to re-platform them as quickly as we needed to. And it was in some respect, parts of that was just like a deep disaster for us and them, like lots of trust broken. And I don't think we were giving the proper context to them. And I think we were overly ambitious in how quickly we could do it. And that was a hard lesson to learn. And so I think the lesson, because it took years to rebuild that trust, is to always stop and talk to your customers. Just stop what you're doing, stop the strategy, stop the execution, stop the metrics, and just have human conversations with your customers. And use those opportunities to read between the lines and infer what it is you can do to help them and what it is you are doing that hurts them. And I think that that's kind of one of the major headlines I would say I both lived through and experienced, and then the big lesson.
Yeah, I mean, I think these days the advice is build fast, break things, and just, charging forward with, maybe at the expense of your customers. So I think that's great advice. So you clocked in or clocked out on your last day at Eventbrite a little over a month and a half ago, huh? How's your first couple months, couple weeks of, I would say freedom, but I'm sure it's very bittersweet.
Yeah, definitely. I mean, I had a lot of time to prepare, from the deciding to go down this route with the board to collecting a lot of advice to, announcing that we had the intention to do this to then closing. It was more than enough time for me to prepare. I learned this crazy lesson on the 11th hour of my CEO tenure that I just thought, it kind of makes me laugh, but it was like really painful, which is we announced that we intended to do this. And, you announce that you enter into a definitive agreement, and then you have to go through all the regulatory and compliance and closing ceremonies. And I got on a Zoom with my leadership team. Probably a few hours later, it was just so happened that it had landed right on our board meeting. And so, I was like, okay, we got to kind of turn our attention to how are we going to use the time with the board? It's really important that you run the company business as usual because deals fall apart all the time. So I remember getting on the Zoom, and these are some of the finest people that walk this planet and who have been in the trenches with me through thick and thin and are like all in, just roll up your sleeves, get it done people. And I saw dead faces, just like expressionless faces of these people that I know so well. And my heart sank, and I was damn near inconsolable that night. I think I pretty much like put myself to bed early with like a bottle of champagne and, just was like, oh my God, this is like terrible. It all kind of hit me in like a very terrible way. Woke up the next morning. I'm not one to dwell, and I don't stay low for long, thankfully. So I tend to like bounce off the bottom of the pool. So came back to the group the next day, and I'm like, okay, I've never done this before, so I don't know what the next few months are going to be like. Some of you have been through this, so I'm going to listen to you. But here's what I think we should do. I think we should do what's right for our customer. I think we should look out for one another and do what's right for each other. And I think we should have fun. Because YOLO. I mean, we knew that we would not be together for that much longer. The structure of the deal was very clear. Like maybe like 6 months leading up to, like 2 years leading up to that, I'd been driving the company with a white knuckle grip on the steering wheel, while also being that kind of CEO that's like, if you keep fighting in the back, I'm gonna pull this car over. Like my mom used to like put her hand back, and like it would be like a game to like. But I was like a really like sort of intense, stressed, micromanagerial CEO in the last 2 years. I'm not proud of it. The minute I like let go a little bit, all these amazing things started happening. And I don't know if I went a day for that period of time without hearing from somebody totally different in the organization that we were having a good hair day. I'm like, okay, I don't know if this is like bittersweet or if we're all being like waxing nostalgic. It was actually true. And it was like this impeccable 11th hour leadership lesson that, who knows if I'll ever put it to use again, but it was pretty phenomenal and humbling.
I love your outlook on all of these situations. It is so refreshing. And I think that, it takes a lot of, personal conviction to know how to handle some of these really challenging, really public situations that you've been in and that you've led through. I also want to kind of close out by talking about what is next, because you said you don't know if you'll ever be in that situation again, but have you thought about, would you ever start another company? Would there be an Eventbrite 2.0?
I'd be lying if I said that Kevin has not shared an Apple Note with me. Mm-hmm. That's up to about 27 ideas. So I certainly have a willing, co-conspirator and supporter in him. And that would be incredible. I've collected a lot of advice on this, and I am doing what feels right for me, which is I am really absorbing the difficulty of not having a structured day. I mean, the difference between Kevin and I, he's in between offices, so he's working from home. So it's really apparent. Like his day which used to be like my day, is making a decision or an observation every single 30 minutes of the day for 9 hours a day. And I am not at all. And so it's like this really interesting juxtaposition to watch him and the velocity and sort of the momentum that takes you through a day versus not having that. And I would say that, like, while I love the fact that my cortisol system treats a Tuesday the same as a Sunday now, that's amazing and that feels really restorative. I actually think it's harder to not have the momentum. And so I am going through that difficulty of adjustment because I think I've never not had a job since I was 15. And I know that's not very unique, but I literally have not had a moment in time when I didn't have a job. I worked all through college. And I think it's really important for me to see what happens when I'm not in that velocity momentum machine. And I have to make a lot of independent decisions that are like scary in a different way. I am in a rabbit hole with Claude Code that is so delightful and interesting. And I know I'm not alone in that either, but being a hobbyist of AI, I think is incredibly important right now. I am taking a lot of customer service requests from my daughters and I think delivering on them quite well. I think my CSAT's pretty high. And I think that I'm also just spending time with things I really care about. So, helping people that I haven't had the time to spend a lot of good quality thinking time with them, and giving back in ways I think that are really meaningful. So it's not comfortable by any stretch, but I think it's important to have this moment in time. I'll leave you with this, which is that when I was 8 years old, I was cast in The Lion, the Witch, and the Wardrobe as Frozen Bunny number 3. And my job was to stand on stage for an hour frozen. And I sort of feel like I'm resetting to 1 on that moment. Like I'm a little bit frozen by design. And I think I'm going to start from the beginning again. And that's what's really important to me is being able to learn and grow and do it all over again if I can in some really meaningful way. And not like let my ego get the better of me.
Well, I can't wait to see what you do as, Frozen Bunny number 3 for the second time.
Thank you.
It's I'm honestly, I think you and Kevin are such a power team, and I think there is, once the dust has settled.
Weird sentence. It was really worth sharing that story with you.
I'm so glad you did. I think I also would have been something along the lines of strange tree in the background and those plays. Yeah, it's hard to stand still. I completely empathize with that. But we can't wait to see what you get up to next. I know Kevin was actually a startup Battlefield judge just this last year at TechCrunch Disrupt. So I feel like we've gotten to connect with both of you in the last couple of months. So really looking forward to see what's next for you, what's next for Eventbrite, and thank you for chatting with me today.
Thanks for having me. I really appreciate it. This has been fun.
Build Mode is a TechCrunch podcast. Each episode is produced and edited by Maggie Nye and hosted by me, Isabel Johannesson. Our art and design is also by Maggie Nye. A big thanks to Morgan Little, who leads our audience development, the Foundry and Cheddar video teams, and most of all to you, the builders, and everyone else in the wider startup community. We'll see you back here next time.